What's up, Cosmic Training Academy? What's happening with you? It's Tuesday, excuse me, Wednesday, and we have a little trade going on here. As you can see where I'm at today at 5:47. I put on a trade earlier today. Um, that was for five of these SQQ options orders. And right now I have a limit price to sell at $500, but I bought it at 83 cents or $83 each share. 83 cents each share, $83 per contract. Since I believe the SQQ will be going up because it's an inverse ETF going against the market, I'm playing against the market. So this is a prime example of how you can make a gain against the market and it'll just fly up for you. So as you can see where I'm at today, 47. But you can also see my trades. They don't, when you're playing against the market, they go down. But you have to trade out at least 45 days to 2 months to give yourself room. Remember, you can close it before then, but you have to give yourself a safe space. SQQ goes against the QQQ. So the QQQ has to be dropping. So let's take a look at what the QQQ is doing for the SQQ to be going up. So, and this is what I'm saying, guys, when you're doing credit spreads or debit spreads, in this case, it's a debit spread. Credit spreads are good. I did a credit spread the other day, but the problem was I did it on Ford, and Ford went from $11 to $19, and I was locked into a credit spread, and I effectively I didn't make. I can't say I lost, but some people would refer to that as being a loss. But I sold the credit spread for $20. I'm not sure what's taking so long. Okay, there we go. I sold the credit spread on Ford for $20, and I got $20. Plus, I bought 100 shares. It was a covered call. I had 100 shares at $1,000.80, and I ended up selling them at $11 because I thought the premium was good at that rate. So I only got $20 premium, but I lost, or I didn't make $800 because Ford ended up going up to $19 from $11 in a week. So it was pretty rough. So, you have to, I still didn't lose. I still made $40, but at the end of the day, you still can take a big loss on something that has the potential to move high. And Ford has just been volatile. And to move $8 in a week, it's just not, there's so much going on right now in the car market. And I thought I was going to be holding it, but it didn't work out that way. So you can see what QQQ did. It fell pretty hard. It tried to come back up, but now it's trying to make another fall. It looks like it's a fall below. It's low for the. Let's see, it's not as low for the day because it's been low it's been lower today. So I caught the SQQ somewhere in here in the middle of the day, with anticipation that when it comes back up, it's going to retrace and start going back down and go lower than its low. So that's my anticipation. Who knows? Let's look at the week. On the week, QQQ and SPY have been kind of crawling up in the last week. So it was kind of really disheartening. I wasn't sure what it was going to do. So you can see that it went all the way up. But then starting around July 8th, QQQ just started falling. Imagine if you have bought it in that area, but high in sight is always 2020, so we don't go back, but I still feel it was going to fall below. And technically, the low for the year, let's see if we can see it, the 52-week low is 269. So we still have a little bit more room for it to fall if it goes that low, but I believe it's going to go below this low. So, you know, that's that, guys. I just want to kind of show you guys that you can get into a play anticipating the direction of the market going down. SQQ is a prime example of an inverse ETF that goes against the market. And here I am today at 547. And I was taking a big loss on this SQQ because time theta caught up with me and didn't give it enough time. I only put it like a couple weeks out when I did it, and here it is, a couple of days away, and theta was taking away my profits quicker than SQQ could even recover. And SQQ hasn't went up to $64. So I really actually was a little bit overly ambitious and didn't give myself enough time. So for example, SQQ, I bought it at 64 and sold it at 75. Yes, it's not going to reach 75 probably, but it did at the same time. It's probably not going to reach 64. So, in that case, I'm going to lose. So you just have to be mindful of that. Looking up SQQ right now. Let's see what it's going to do. I could not tell you guys why it goes slow when I started recording. I think it has to do with the drive. But anyway, SQQ could be showing up. I'm not sure what's taking it so long. But again, guys, that's what I'm saying. And in this particular case, I put in 5 contracts. So yes, you can win big, you can lose big, but the reality is that if you give yourself enough time in a market, you have a chance for it to come back in your direction. But you have to have patience. I mean, it's not knocking any scalpers or day traders. They're okay because they're trying to do it really quick and get out. So they only need a point or 2 points or whatever to get out of a trade. But when we're doing this kind of trades, we need a bigger movement. So here's $54 right here. So the probability of it reaching 64 is going to be tough. I mean, it could happen in the week. It could happen. I really need it to happen to get myself out of this situation. And I'm not sure if the theta is going to make me lose and still not be able to make any money. You can see today's return on my SQQ strategy that I have here open. These 3. And I'm up, says today's return, 512 total return because I'm losing 270 is 116, but total value of it is 1,000. So you can see I'm heavily invested. Again, guys, I only do a $2,000 account just to show and let people know this is what it's all about on small accounts. Everybody thinks, oh, I can't make any money. You can make money on small accounts. You just have to manage your risk. Like these are risk kind of trades, but basically how I have it, where I have so much time, it mitigates my risk to a certain extent. Okay. Well, hey guys, I hope that was helpful. Again, place the market in a direction that you think is going. This trend is your friend, and that's how we win. And just be patient because if you want to day trade, day trade. If you want to trade to make money over time, like me, I'm basically a swing trader because I found swing trader has less risk involved. You don't have to take your loss today. You can give the market enough time to switch over. As you can see, the day was looking not all that great. I started off the day with only 86 cents, and it just, and then I went down at one point, losing 300, and then all of a sudden, boom. But to me, it's bound to happen. I have enough time for expiration, with exception of one trade. I don't typically buy too many stocks on this account. Because right now I only buy stocks that pay out dividends and are ETFs, So that's what I'm doing to build up another portfolio right now. And I take the profits off of this, like this right now. If I could close these out, I would take the 300 off the table, put it in dividend stocks, or pay a bill and then put the rest in dividend stocks, or put some in dividend stocks, then pay a bill. That's how you should do it. And then keep on going. And then play with the 2000. And essentially that's what I do. So, small accounts, you still can make it. You just have to watch your risk tolerance and be careful and really go down the line of strategies of things that you have to make sure are in place for a high probability trade. Again, look at this. I mean, August 26th, what is this? This is July the 13th. So I'm still out a little bit on that one. Um, this one's for December, January. So you guys, you see, I have time. This had been going down, but then in the last week or so, it just started coming up. Why? Because the market is going against everybody, and it's going down. And so SDS is another inverse. So I play the inverse game right now in the market that's going down. If we have a bull market, I'm playing up. We have a bear market right now. I'm playing down. So I'm playing to win. When they're leveling out and there's no longer a bear market and we start to see a turnaround, then I'll play the up. In the middle of that, I'll play the stocks. I'll play trades where options where I figure the market won't go too high or go too low when it starts leveling off. So that's how I play it. Bull market, we buying up. Bear market, we buying down. And in the middle, when it's leveling off, we place option trades that can make money on either side of the trade. Okay, so 5 years in the game, I'm learning every day, and patience is the key in this thing right here, man. All right, especially when you're swing trading. When you're doing anything other than swing trading, patience isn't the key. Or if you're not long term investing, patience isn't the key. But when you are, when you are doing this is the key right here. All right, guys. Mr. Cosby here, Cosby Trading Academy, Rock 4. I wish you guys all the best. Got any questions, leave a comment, like, subscribe, and we'll see you on the